Hey everybody, Chuck Barone. Here we are, Friday, May the 5th, 2023. In Vegas, it's Cinco de Mayo. Everybody having a reason tonight to eat Mexican food and drink margaritas, which is a great kind of holiday, especially after a week as crazy as this one, right guys? It's been a wild ride. Wow. Anyway, a lot of stuff to talk about today, but before we do, as always, I want to welcome everybody to the show. Thank you guys for your support, for watching the videos. All you guys do, it means a lot to us. It does. Keeps us going here. Markets today. Well, what a weird day, right? So you look at this market. The big news of the day coming out to start the day, jobs blowout. Wow, economy creating jobs like crazy. Stock market blasts off, man. Numbers amazingly high today. I think in my mind, I would look at this as a chance to blow some of the crap out of your portfolio. These are real selling opportunities here because this is the Dow and the market wants to always be in a bull run, man. They're always going to find any excuse they can to rally. But the reality is none of this stuff looks good to me. So anyway, Dow Jones today up 546 points, a nice rally for the Dow, 33,674 on the index. The S&P up, that's 75 points today, a huge rally, 4136. That's broad across the whole wide market rally. NASDAQ, our tech stock sector, up 269 points today, 12,235, back above that 12,000 like no problem. Let's see if the optimists and the bulls are right on this. I just don't see it. You know, this jobs report, they're taking that as good news. I think ultimately it will not be good news. Apple came out with earnings today. Who's surprised that Apple's earnings were good? I mean, they're charging more for their products. They're not selling as many of them, but they're charging more, so they're making money. Everybody that's Apple junkies like I am, they're going to buy Apple products, so that's not a big surprise. Regional banks, coming up today, really? Ask the guys who owned Republic and were bottom fishing Republic Bank how that turned out for them. This is all silly craziness, guys. It's Friday. It must be everybody's tired and brain dead from the whipsaw we've been dealing with this week. Don't take this market rally as good news. It's nothing more than a small rally in what I believe is a bear market now. Bond market today, yields up. Wait till you hear these numbers, guys. Okay, so the 10-year up 10 basis points to 3.45%. The 2-year up 19 basis points, 3.92%. This is nuts, guys. Okay, look at this 2-year. Monday, 4.15%. Thursday, 3.65%. Friday, 3.92%. Guys, the bond market does not do this. So this tells me there's just a ton of uncertainty. It's whipsawing around depending on the data of the day, the rumor of the day, whatever, the craziness of the day. Be careful, guys. This market is very treacherous right now. And the market has always been designed to take money from people who don't know exactly what they're doing and give it to people who do. So be really, really cautious, guys. Dollar today, down very, very small, fractional, 101.28 on the index, just hanging in there. Nothing exciting with the dollar. Metals today, a little bit of a sell-off. We got some profit taking. That's fine. And these numbers are still strong, but you had gold down $32.90, 2017.60. Still a great number for gold. Silver down 34 cents, 25.67. What's interesting is silver went right past 25. I'm guessing it's going to have to go down and test support at 25. Same as gold has been doing. These are consolidation phases. They're going to be moves. There's going to be movements, guys. Don't trip on it. The trend in gold and silver is up, and it's going to keep going up. Believe it. Oil. Well, oil today had a nice little bounce too, up $2.78, $71.34. Right in the pocket between 70 and 75, where I've been saying it had broken down under 70 in that 65 to 70 range. I think it's comfortable between 70 and 75. I I've been saying and believe still the trend in oil prices are down. So we'll see where it goes. But right now, oil, even when it moves up like it did today, that's a pretty good move, $2.78 a barrel. It's still not moving up into like anywhere near new highs. So it's just that's a nothing burger. Bitcoin today up $664, 29,508. Looks like Bitcoin getting ready to make another run at 30K. I've been reading a lot of stuff about Bitcoin and cryptos, a lot of very positive sentiment. It's really funny. It's like people, the mainstream, who were very skeptical of cryptos, especially mainstream publications, Barron's and Forbes and stuff like that, all of a sudden super bullish on crypto. It kind of red flags it a little bit for me, but nonetheless, a lot of positive energy around Bitcoin and cryptocurrencies. News you guys need today. Okay, so let's talk about this jobs blowout. So here's the deal. Yesterday, we saw that the unemployment numbers ticked up, right? More people filing for unemployment. Number was just a little bit higher than the previous, showing maybe a little bit of weakness in the new jobs market. Well, today's jobs numbers kind of blew that all out of the water. They were expecting 180,000 jobs. They got 253,000 jobs, man. Wow. Big number. Big blowout above what they were expecting. Still showing amazing growth in jobs. Wages on this same report showing 4.4% annual rate increase in wages. This is for people who are staying at their job, getting more money. The unemployment rate was expected to, it was sitting at 3.5% for a few months, was expected to actually rise to 3.6% on this report today, instead falling to 3.4%. Another big surprise, right? So this is really some crazy stuff here, because this now puts extra pressure on the Fed, right? We know the Fed wants to pause. That's kind of what they've been telegraphing, and they've been sticking to what they've been saying they were going to do. It's been pretty predictable so far. We know now they want to move into this pause phase to see how these rate increases affect the economy. We know the Fed believes that a hot jobs market is bad for inflation, that, the job market is driving, because wages are going up, it's driving costs higher. So the Fed holding strong, talking today, Powell and a few other people out there, the Fed holding strong on there will be no rate cuts this year. Okay? So we'll see with the Fed, because I think before long you're going to see some real pressure as far as the economy, and it's going to be offset by some real inflationary pressure. Okay? They finally just managed this past week to get the interest rate higher than the inflation rate, but barely, right? You got the PCE index, the personal consumption expenditures, 4.9% core rate. You got Fed funds rate at 5.1%, so the interest rate's just a little bit higher. We've been saying since last year that it needed to get higher than the rate of the interest rate needed to be higher than the rate of inflation to really have an effect. They may not get a chance to really gauge for long what that effect is going to be before they might have to raise rates again. Now, when we hear about this job stuff, a lot of people, the first question, because you guys are smart, man, the people that watch this show have been getting a little bit of an education. They know to be skeptical. So the first question is, well, what kind of jobs are these? Are these basic, burger flipper jobs, minimum wage stuff, or what are they? Well, I went and dug a little bit deeper, so check it out, guys. You got business services, adding 43,000 jobs. Healthcare, adding 40,000 jobs. Now, these are typically not minimum wage jobs. Construction, 15,000 jobs. Factories, 11,000 jobs. Airlines, hotels, restaurants, all showing big gains in their employment. So it looks to me, now we'll see, restaurants is a little bit vague. Is that McDonald's or is that Le Cirque? Who knows? But overall, these are not minimum wage jobs, right? Some blue-collar stuff with the construction and factory stuff. Some white-collar stuff, healthcare, airlines, hotels, business services. All in all, a pretty pretty strong number. Anyway, so we'll see what that does. We'll see where that leads the Fed. It's going to lead to more fun next week, right? But I wanted to talk for a second before we wrap up for the week. Yesterday was feeling pretty negative, still do today. I really feel like we're going to get a dose of this stagflation, and I want to tell you what that means and why I think it's going to happen, okay? So, stagflation, what does that mean, okay? Well, what that means is basically stag, meaning stagnant economy, inflation, meaning high inflation. So basically what you get with stagflation is a crappy economy, slow, maybe moving toward recession, negative GDP. If it's positive GDP, it's barely inching above the Mendoza line. You combine that with high interest rates. You combine that with high inflation, still persistent inflation. You add in slowing jobs or negative job growth. You get a very unhappy population. This is the kind of thing that changes elections, gets people really bummed out, really angry. People tend to lash out when they're angry. So this does not create a real nice public vibe in our communities, right? Everybody's stressing. Everybody feels like the worst is yet to come. And what happens is it creates this negative flow, then which starts a spiral, and it's really, really tough to get out of it. Now, why do I think we're going to see that? Okay, well, let's look at some of the stuff we've been seeing just recently, right? So you got the bank crisis. We know what that means. You know, I try to tell you guys all the time how you have to, when you follow this stuff, always put the perspective in your mind of how does this affect the ultra wealthy and the big corporations? Because they're always the beneficiaries, right? So, bank crisis wipes out regional banks. They're all suffering. Stock prices down like crazy. Here come the white knights, JP Morgan, picking up $500 million a year in net income, tons of assets. Haven't been able to find anything at all about what JP Morgan paid. This crisis is not over. Rates are not coming down soon. Okay, so there you got bank crisis. You got still high inflation. You all see it. You're buying stuff out there. It is what it is. You got hot jobs, hot wage growth. We saw that report today. You got falling sales, businesses not selling as much, still making profit because of price increases, but sales falling. You had commercial real estate coming, which is going to be an earthquake, man. It's going to really hurt banks. We're going to see some government action, bailouts, and all that crap coming with that because it's trillions and trillions of dollars, okay? You got the bond market uncertainty. We saw just this week, the whipsawing effect in the bond market of the 2-year, right? You got the debt ceiling coming with this stupid, made-up nonsense, which could be a total catastrophe for our economy. You got manufacturing slowing down. You got tons of tech layoffs already announced, right? You got our enemies plotting hard against us, China, Russia, Iran, North Korea, all our friends across the world, right? Everybody cheering the demise of the United States, even a lot of people in our own country. You got a totally inept government on all levels, from your local government to your state government to the federal government and all the components of it. Just political bullshit for the benefit of the big corporations and their rich friends. You look at everything that's happening, the rich are going to benefit from it all. Now you add in the consumer, the engine of our economy, broke as you can be, totally maxed out on credit, gigantic credit card rates, right? So the consumer class broke and totally in debt. And there's more. If you can think of anything else I've missed, and there's a lot, put it in the comments today, right? So you add all of this up, and then you put in there, well, who's going to save us? What can save us? Well, I don't think anything can. I really don't. So we're going to have this stagflation. We're going to have a really rocky period. It's going to lead right into this election, I'm going to guess, in 2024. It's going to be fascinating stuff to see it all. Of course, we're going to bring it to you every day. That's it for this week, guys. Unbelievable week. We're going to be back on Monday to bring you guys the news you need. Remember what we've been saying, guys. Protect yourselves, protect your assets, protect your money, get defensive. Now's the time to not lose money. Anyway, that's it for the weekend. Enjoy yourselves, guys. Relax. Get away from the crazy for a little while. Have a cold one with your friends. Relax with your family. Play with your kids. Do the things that give you pleasure. Because we'll be back to this on Monday, and I'm chancing a guess that it might not be pleasurable. Anyway, great weekend, everybody. See you Monday. Till then, take care. Thanks.